Hello, investors. Thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I want to talk about Datadog. I believe that Datadog has become a bit of a crowded trade. Against this backdrop, where many tech companies have meaningfully been demolished of late, um, investors are having to face a difficult question, right? So, they having to think about, is the risk reward really that interesting right now? So, I have absolutely no doubts that Datadog is an amazing company. I've been quite bullish about it in the past, but paying right now 33 times this year's revenues probably is pricing in a lot of optimism already. So, just gonna dig in, right? So, you can see here. So, compared to other stocks I'll put there CrowdStrike, Penetrace, Splunk. Compared to other tech names, Datadog has just really held its ground, and everything else is kind of in the past 6 months has pretty much gone into the red. Now, here's the things that I wanted to mention. Yeah, so you can make a comment that CrowdStrike and Datadog are not really that similar, but the fact of the matter is that Datadog is rapidly expanding their product portfolio to include some cybersecurity aspects. So I think that there's more that makes these two SaaS companies similar than there isn't. Yeah, but it's all together, like because ultimately no stock really trades in isolation, right? You got to think about the backdrop of everything else and whether new investors that are not entrenched, how would they think about it, right? So would they be willing to part of their hard-earned capital and invest here? So just to highlight something. So in the past 12 months, I've been an unwavering bull. You can see here, all the green dots in the screen is my bullish stance towards Datadog. So I've been unwavering here in my stance, and you just came through all the ups and downs. I've remained very bullish this name, but right now I have to kind of say to myself, is it really worthwhile for new investors to kind of get excited and to invest their hard capital here? So let me just go through and highlight what I do like about this business, okay? So one of the things is that when it comes to investing, it's not good enough to be right when everyone else is right? Because that's not going to lead you to outperform. And I can recognize, and you can recognize, and everyone can recognize that the guidance here is very, very strong. So for Q4, they're pointing towards 65% year-over-year growth rates. Now think about this for a moment, okay? So that's not only rapid acceleration from last year. So we're seeing 1,000 basis point acceleration relative to the same period a year ago, but we're also seeing that the business is, if it's growing at 65%, it's really, really fast growth. So, I mean, however you're going to look at this is a really impressive company. So what does it actually do? So it's a data and analytics company, right? So it's just a company that is able to ensure that customers can have visibility and observability over what's going on with their networks. So if you think about this from another point of view, the enterprise, there's so much cloud migration and digital transformation undergoing that these are two strong tailwinds that are providing Datadog with a lot of revenue growth. Now, since the pandemic, it's been really easy for many companies to kind of get up and start their enterprises, but they need to have be able to understand what's going through their networks. And this is where application performance monitoring comes in, right? So Datadog provides the infrastructure so that companies can get to the root of the problem and resolve the problem much, much quicker. So it gives them one dashboard that can provide companies with a way to really see what's going on. So if you're able to have, as a customer, better provide you to your own customers a better experience and you have less downtime, that means more uptime, that means more revenues, and that means less revenue, less spend cost, less spending time on actually making sure that your network is operating as it should be. So you get more revenues and you're spending less money. That's very high ROI for customers. And you can see here the customer growth is very strong. This graph here doesn't include the Q3 results, but you can see for Q3 results, they had 17.5K customers, up 34% year over year. So, you know, I always say follow the customer, right? The customer always knows what to do. And if you're seeing a very large growth in customers, that's very insightful. That backs up that the revenue growth rates are very, very strong. They have, I didn't put here, but they have very strong net retention rates. They're consistently above approximately 130%. So yeah, strong net retention, strong growth in customers together. You're going to see a lot of top line growth, and they have very compelling profit margins too. Now, this is the thing that I wanted to mention. So think about it, right? Right now, Datadog is priced at approximately 33 times this year's revenues. Okay. Now, I understand that it's a highly innovative company and it's always been expensive, right? It's never really remained on sale. But relative to the rest of its peers, when many of its peers are on sale, you have to think about it. So if you're a new investor to the stock and you kind of think to yourself, okay, I'm not committed. I can, buy into Datadog or I can buy into, let's say, something like CrowdStrike. Okay. So just for comparison, so CrowdStrike has very much a similar uh, growth profile. It's the leading cybersecurity name and it's priced at 22 times forward sales. So why would a new investor come and pay 33 times forward sales for Datadog? It just doesn't make a lot of sense to me. So you have to kind of think it's just one of those names that everyone's kind of crowded around, and until it kind of breaks, everyone's just kind of moving their capital. Also, you've got the quote unquote buy and hold investors. These are the investors that, as long as the share price is going up, they buy and hold. But as soon as, things kind of start to go a bit grim, which they do. Every company goes through some period that goes a bit grim, and then they realize they're actually not as buy and hold as they thought they were. So, everyone kind of throughout this, I just wanted to kind of mention that I recognize that, Datadog is a really good company. What I wanted to say is that if you think about it, like everyone points to, it's Apple's being a great company in the past. And if you just to give you some comparison, right? So everyone knows which company was great looking historically, and everyone points, oh, look, if I just held on to Apple, Datadog could be like Apple. But Apple is one of the very few companies that is able to be so innovative. And you can see it's not only that its revenue growth rates have been growing, but the multiple expansion of Apple has gone in the past 5 years from approximately 4 times sales to 8 times sales. So you see that very large jump here. So it's not good enough to recognize a great company, whether it be Datadog or Apple or whatever. It's not good enough to recognize a great company. You also have to find what is a great investment. That's really much more difficult when the Datadog's already priced at 33 times for sales. Are you going to really expect, as part of your investment thesis, to see the multiple meaningfully expanding much further? I mean, it's really difficult to say that. I think that's the thing. This great company is not always a great investment. But if you want to find out what kind of names I'm really bullish about right now, don't forget to check out my marketplace. It's called Deep Value Returns. You can come in, drop me a line, and I'll help you become a better investor and give you high quality, actionable investment insights. Thank you so much for listening. Okay, see you. Bye.